Okay, good morning, students. And today's topic is regarding the exchange traded funds. I hope you have a somewhat little reference about the exchange traded funds in the previous class. We had discussed about the exchange traded funds, something little about that one when we were discussing the mutual funds. And in this class, we are going to discuss in a big manner what are all the different types of exchange traded funds, everything. Okay, in the meantime, I hope you might have written the exams well. We have started correcting your papers. I expect more thing from you. Whether you are given case example, I have to see, because we are discussing number of case example. So far I have corrected few papers. You have mentioned only in conceptual level, that is in basic level. I expect something more. Okay, you are all MBA students. You must know the concept. Without knowing concept, we can't do anything. That I agree. In addition to that, you are able to give something different. As an MBA student, you are considered as the professional people. Only if you are considered as a professional people, we are able to know clearly. Okay, that's why I told in the beginning itself. We are dividing into three category: low level learners, that is conceptual learners; middle level people, we are discussing inside the classroom; advanced level learners, you can go for referring others, that we have put up in the LMS. Okay, so with this we will start the class. We are having only few classes next. Okay, in the exchange traded funds, it is something different with the mutual funds. In previous class, we have discussed about the mutual funds, but the concept is same. The concept of exchange traded funds are same with related to mutual funds. Only one difference in case of exchange trade fund is you are able to trade the units in stock exchange. You can trade with the help of the stock exchange, BSE, NSE, whatever may be the stock exchange, you can trade the units. And this units net asset value also be known to everybody. You can sell in BSE, even you can buy in BSE. That is the concept of exchange traded funds. Let us go through why you are studying the exchange traded funds. What is the motive of studying these exchange traded funds as an MBA graduate? You can see in the news, I already shared with you yesterday. Some of you might have gone through the news. There is something in mutual funds, there is a push towards the exchange traded funds. Previously, it was mutual funds. Now, during late 2019 and beginning of 2020, they are giving importance for the exchange traded funds. Of course, maybe due to gold, but it is gaining momentum. You can see in this newspaper, which was published just 2 days back, even the exchange traded funds based upon the index tracking is gaining momentum. Index tracking means, like mutual funds, here also there are some securities. The securities may be index of the stock exchange. Say for example, BSE Sensex may be considered as an asset here. We will discuss later on. So, why this exchange traded fund is having sudden momentum? Likewise, in the news report, they mentioned that investors abandon mutual funds. Even they are coming out of mutual funds, flock to stocks. They mention in a commercial jargon, and ETF is gaining in July. See that one. the first month of this year as well as last 4 years, during the last 4 years, there was not a heavy rush towards exchange traded funds. But now, this year, everybody is moving towards the exchange traded funds, especially the rational investors. That is the reason why you are going to study all those things, because there's a tremendous change in the economic reforms by the government recently. You can see in the another news, which was from the July 20th, India ETFs climb as investors look beyond coronavirus. That is, the rational investors are now gaining. That is the reason why the exchange traded funds are gaining momentum, because they used to find out the risk aversion behavior in the exchange traded funds. Be clear, risk aversion behavior. Risk aversion behavior means if you buy the exchange traded fund today, even within 2 days you are able to sell. But in case of mutual fund, if you buy a unit, you can't sell within 2 days. But here it is possible. That is, they wish to have a risk aversion towards the investment. That is the reason they mentioned about the sudden increase in the exchange traded funds. You can see the another example also. It is one of the reason, but another reason, because of the boost in debt markets, the bond market boost. Recently, our government introduced a number of schemes. The bond exchange traded funds have been introduced by the government, and the unit size has been reduced to rupees 1,000 also. That may be the one of the reason why the exchange traded funds are creating the momentum. We will discuss all those things today. Another thing, the government of India, for their purpose, they introduced the concept of debt equity funds in the form of exchange traded funds. You can see in this news clipping the Bharat bond, that is the debt bond issued by the government of India in the tranche 2, that is the second issue, has been oversubscribed 3.7 times. That is equivalent to 4 times. That is, the people are rushing to buy the bonds. That is to be considered as an ETF. It mobilizes around 11,000 crores. See that one. That is the recent one about the exchange traded funds. Another reason they mentioned that about the gold, now the gold prices are increasing heavily. So every day there's a heavy fluctuation among the gold. Once it moves out, suddenly it comes down, then it is moving to a peak level. That is also the one of the reason why the people are moving towards the exchange traded funds. So in this time, you are studying the exchange traded funds. As an MBA graduate, you must know what is the motive beyond the exchange traded funds, why people are moving towards the exchange traded funds. Then if you are going to work in a finance company after 2 years, how you are going to mobilize the fund. That is why you are studying this topic. As an MBA graduate, you must know clearly what is the purpose of the exchange traded funds, why people are moving towards exchange traded funds. Today we have discussed with the example of some of the news clippings. Because of the gold, what as you are seeing now. Another reason, because of the government policy changes, because of the corona issue, there's a sudden momentum. These are all the reasons. Then the economic change. The people wish to go for risk aversion. These are all the reasons why a person is investing in exchange traded funds. Even the public, even if you want to become a financial advisor, you will select all those things only for this reason. That is the main reason beyond the exchange traded funds. Let us see the concept, what the concept says about the exchange traded funds. You can see the meaning of exchange traded funds. First thing, it is a marketable security. That is the unique feature of exchange traded funds, which has been differentiated from the mutual funds. In case of mutual funds, it is considered as an unit. Unit means they will get the amount from the investors. They will invest in some of the securities. From that gain, the amount will be returned to you in the form of NAV, net asset value. That is the concept of mutual funds. Here, exchange traded funds also, they will do same thing. They will collect the money from you. They will invest in securities. That is important. What are all the securities they are going to invest is question mark. It may be an open one or it may be a closed one. From that income, they will return back the proceeds to you. That is the concept of exchange traded funds. But here, the exchange traded fund units, you can buy and you can sell. That is the thing. In mutual funds, you can't buy and sell. Once you purchased, it will be with you. It is the private management. But here it is not like that. Today you have purchased an ETF from Reliance B. If you are not satisfied about the Reliance B ETF or Kotak Mahindra Gold ETF, you can sell. That is possible in case of exchange traded funds. That is why they clearly mention in the definition itself, it is considered as the marketable security. Be clear. Okay? That is why in the definition as well as in the meaning itself, they clearly mention it is the concept of marketable security. Even they may invest in index. Today we are going to see an example about one of the organization invested in BSE Sensex. It is not only security. We have discussed about the index funds. In case of exchange traded funds, the manager can invest in the index also. Even in commodity, we are having a very good example of gold ETF, as well as in bonds. Very good example in bonds is Government of India bonds itself. We have discussed the Government of India already issued the bonds. Then even it may be in equity, the IDBI Bank, they created an equity index for exchange traded funds. So these things you must know. That is the unique feature of the ETF. Then the price of the exchange traded funds have been measured in terms of net asset value, like the mutual funds. We have discussed how we can calculate the net asset value in case of mutual funds. Same thing here also. The fund manager, that is the person who is investing in the exchange traded funds, they will inform about the net asset value. Every day you can see the net asset value. Based upon that, you can buy the ETF or you can sell the ETF. That is the conceptual meaning of the exchange traded funds. You can see in the chart also. As the definition mentioned clearly, ETF is considered an exchange traded fund. It is only a fund. That means they are collecting from the investors like units. Then you can see they can invest in bonds, stock, foreign currencies. Of course, in India, we are having less organization investing in foreign currencies. But in case of Singapore, you might have seen foreign currency investments are high. In ETF, they can have a Forex ETF also. Then oil futures. Some of you are studying derivatives. Now they are investing in the oil also, crude oil. Then the gold bars. That is called gold ETF, gold exchange funds. They may invest. That is the fund managers can invest. If say for example, Rejoy is a fund manager, Rejoy may invest in any of these securities. And also very important, he will get the amount from the investors in terms of units. That units can be marketable securities in BSE or in NSE or even in India NX, or even you can use the NYSE or in case of any other country currency. That is the exchange traded funds. You can see how we are differentiating from the mutual funds. The main difference, if you see in case of the mutual funds, only trade per day is possible. But in case of exchange traded funds, multiple trade per day is possible. In case of mutual funds, day trading is not possible because they are identifying in terms of units. It is not considered as a security for marketable. Remaining concepts are same. That is why I have shown this diagram. Another one you can see the role of exchange traded funds. What are all the different stages in the exchange traded funds? A conceptual understanding. You can see there are around 5 stages. You can see in these images what are all the 5. Stage 1, they will define the exchange traded fund. Say for example, if Melvin decided to go for creating an exchange traded fund, he will create what are all the investments you are going to do. That is why in first stage you can see an exchange traded fund is an investment fund. He used to mobilize where he can invest. And second stage, after identifying the investment value, the exchange trade fund holds assets as stock, commodities or bonds. That means these securities in which you are going to invest, that is fund managers are going to invest, has to be identified. First stage is an organizational setup. First stage, you will receive the huge amount from the investor. Second stage, you will identify where you can invest that amount. That is the brain of ETF. Be clear. Second stage is the brain. Because fund managers, they are doing all those things. If you are going to work in JB Morgan, your role is to give result only for the second stage. Because where to invest? That is the question mark. With the help of number of fund managers, they will decide. Even it may be in the form of assets, they considered securities as an asset. If the fund managers are investing in any shares, that shares are considered as the assets. They are considered as the securities. These securities are considered as the asset for the exchange traded funds. Because we have discussed the asset backed securities, some of you know about that one, same thing. Next, in stage 3, ETFs can track an index. Index means they can create an index based upon the investment, like stock market price. You are seeing the price of stock market, how it is doing in every day. Same method, they can create an index. Today we are going to see some of the index in live. Then in the 4th stage, they have to market that one. That is important thing, because only if they are able to market, they are able to gain income, the fund managers. So usually it will attract less tax, of course. The cost is also less for the investors, but the cost is high for fund managers. So that is the 4th stage. Last stage, they used to create a product. Product means financial product. You might have studied in portfolio. That is the deciding of portfolio. Portfolio means a group of securities which they are going to invest. That is called portfolio. So in the last stage, they will clearly identify. That is, in 4th stage, they marketed. So in 5th stage, they will know what are all their investment opportunities. They will create a portfolio like Sensex, everything. And they used to publish all those things through the exchange. That is the core concept of the exchange traded funds. So dear students, you must know all these 5 stages. If you are going to establish an exchange traded fund, if you are working in JB Morgan, or even if you are going in KPMG, whatever may be the organization, they are providing consultancy services. In future, you may give consultancy services. You may give consultancy services to me also. Sir, now this fund is going well. You can invest here. You will give me suggestion. By that time, I will inform my students, upcoming students. So that's the concept you must know. Your brain is in the 2nd stage. 3rd stage is only indexing. 4th stage, you have to market to the investors. 5th stage is the portfolio identification. Okay, now I am going to ask one question. As usual, you are going to answer that question by mentioning your roll number, then the answer in the private chat box to the KJSOM main host. Don't post it in common. The question is, in the beginning, we have discussed recently the investors are moving towards exchange traded funds rather than mutual funds. Be clear. The investors are moving towards exchange traded funds rather than mutual funds. What is the reason? We have discussed a number of reasons, but from the investor's point of view, I have told only one main reason. Okay, just in 2 words. Enter your roll number, then your name, then your answer. That's all. Why exchange traded funds gain momentum recently from the investor's point of view? Your question should be based upon the investor's point of view. Okay, you can start posting. In the meantime, we'll discuss the remaining features of the exchange traded funds. You can see in this chart, there are different types of exchange traded funds. All are purely based upon the investment activity, where these fund managers are investing. Fund managers means if you are creating an exchange traded fund, you are considered as a fund manager. Based upon your investment, the exchange traded funds are classified. The basic things in case of India, in India they are allowed for equity, first one, then stock, that is the second one. Third one is the bond, government of India issued. Fourth one is very important thing, that is gold exchange traded funds. These are all the four common items available in India. Here you can see the concept in another way. Closed-ended mutual fund. Closed-ended mutual fund means in case of the fund managers, they won't disclose where they are investing, but they will disclose the net asset value because as per the Security Exchange Board of India, they have to disclose. They won't tell to the common public that where they are investing. But investors will know. It will not mean. Next one is second thing you can mention that one in the clockwise. Underlying maybe gold metal indices or themes. That is part. Themes in the sense in the index. Sensex, Nifty, all these things. Then another thing, ETF is fully backed by the asset holdings. Asset holdings means the securities, the group of securities where fund managers are going to invest. That is called asset holdings. Otherwise, the portfolio. The entire portfolio is considered as the asset holdings. Then they will follow the trading like the stock. You can see in this example, traded held in demat like stocks. The units may be considered for the demat. And likewise, last one, no impact on the AUM, that is asset under management due to buy and sell. AUM means asset under management. There is no impact means the fund managers can even sell the securities or they can reorganize. That is the asset under management. If they created a portfolio, this portfolio are considered as the asset holdings. The income, everything will be managed under the heading asset under management. These are all the technical terms as an MBA student you will know. Because when you are going for interview, they may ask what is asset holdings. What do you mean by asset under management? Asset holding is nothing but the group of portfolio which is successfully running. Asset under management, how you are managing the portfolio of investments. That is the asset under management. These are all the components of the exchange traded funds. Then as usual, we have already discussed there are different types of exchange traded funds. In case of exchange traded funds, we have discussed the investment may be in equity funds, fixed income funds, commodity, currency. Of course, in case of India, it is very less, but it is also permitted currency. Then real estate. That is quite important. You know, in Navi Mumbai, they are engaging in real estate funds. Of course, during the COVID, I don't know what they are doing. Navi Mumbai is very famous for creating a grey market. Grey market means black market for real estate funds. They created a very good real estate funds in Navi Mumbai. In case of Bangalore, once in electronic city they started, but now it is not legally permitted because they are doing in the form of gray market. So they abandoned that one in electronic city in Bangalore. In case of Nagpur, it is very famous, but it is not legalized and it is running in the form of gray market, black market, real estate funds. Like chit funds, they used to gather the amount from everybody. They used to invest in real estates and the amount will be distributed. Even if your doesn't prefer that one, you can sell to your kids. Usually in case of Nagpur, I came to know that there are some small organizations doing this thing. Especially father may buy an exchange traded fund based upon the real estate. Of course, it is a gray market one. And during the marriage, they are giving to their doctors or even the son. That is possible. That means in the marriage event, they are declaring clearly that I am giving this fund to my son so that my son and my daughter-in-law will survive long as possible. They will get income every month. That is an interesting thing in case of Nagpur. That is the orange city. You can ask them, but it is not legalized. That real estate funds, then special funds like asset backing funds, we can have that one. Government of India has issued that one. The bond ETF, it is in the form of special funds because for the purpose of downfall in the economy. Of course, government is not saying downfall. To recover from the COVID-19, they created a special fund for that one. The government of India now created the Bharat Fund. That is very good example for the last one. So as an investor, they have to stick on about the mutual funds as well as the exchange traded funds are in stock. Why I am telling, if you are running a fund manager, in case of exchange traded funds, the investors will ask why we have to invest in ETF rather than in stock or in mutual funds. That is the question mark. You may be working in PNB Paribas and suddenly a customer, for you customer or client will call you, I have to invest in stock. I am seeing the pharma industry shares are moving up, so I am going to invest in pharma. So why you are asking to invest in ETF? So what will be your answer? Same thing. The answer is equal to a mutual fund. That's why it is mentioned. Don't put all your eggs in one basket like a portfolio. In case of portfolio, it is a diversified one. You can say if the risk aversion will be the priority in case of exchange traded funds. Stock, more risk. If you are investing in the Dr. Reddy's, the risk will be more. You are investing only one. So your next option is mutual funds because you are going to put your eggs in different basket, diversified funds. But there also, there is no risk aversion because once if you invested, only after the end you are able to realize, of course, you can't trade. But in case of ETF, you can trade. If you doesn't like your portfolio of the fund managers, you can trade in BSE or NSE, whatever may be the stock exchange. And the price movements are available. That is the advantage of the ETF. This is the USP of ETF. That is why I have shown this one. As an MBA student, you have to know these things. If you are working in an organization, what is the USP of the ETF? That is the core thing here. So when you are studying the concept, here it represents the price movement. Like any stock, it consists of the qualities of the stock in one side and mutual funds in the another side. They used to balance between the stock and the mutual funds. Stock price, you can see the upward trend and downward trend. So here also in ETF, you can see the price movements. What is the price movement? Next, in mutual funds. In case of mutual funds, they are calculating the net asset value. Here also, we are calculating the net asset value. So the ETF consists of the plus points of both stocks as well as the mutual funds. That is the USP of ETF. You can sell in stock exchange. Be clear about that one. Okay. Here is another classification. Now you can see we have already discussed. That is, in case of examination, if there's a question you are able to answer, index, commodity, inverse. You can see that one. If the profits are declined, you can sell. Then another thing, it is actively managed. Actively managed means it is a fund manager. Then industry diversification is also there. Then foreign market is also there. These are all the other types. There are a number of classifications for the exchange traded fund. Here is another classification. We used to call it as closed-end fund, exchange traded fund, and open-end mutual funds. You can see the difference. Share price, in case of closed fund, will be the discount. That is how much the fund managers are going to decide. But in exchange traded funds, it is equivalent to net asset value because it is tradable in stock exchange. So it is based upon the net asset value increase or decrease, you will buy and sell. Open-end mutual fund, it is not like that. They will declare only the net asset value. Just only for your differentiation's sake, I have shown that one. Let us go for a practical example. How these are all traded, how you are identifying. You can see here, this is an example of Kotak Sensex ETF. This is an example of Sensex ETF. This is not Sensex. This is an exchange traded fund where the underlying assets are Sensex. So it is based upon the Sensex. That is the concept. You can see that one on 12th August, the price was 398.38. See that one. Like regular stock, you can see that one. Likewise, here they may ask whether you are going to invest in systematic investment plan or not. That is also possible here. Then you can calculate the net asset value. You can see in that one, what is the net asset value on 12/8/2020? What is your compound annual growth rate? You can calculate. What is the compound annual rate on 4th of August? You can calculate. These are all the things possible in exchange traded funds. You can see what is the net asset value for last 5 years, 3 years, and where they are investing. You can see that one Sensex, even though it is based upon that one, in which industries they are investing. And they used to disclose clearly how much percentage of net asset they are having. That is 16% in Reliance they have invested. Another thing, you can see that one, what is the benchmark return of this index? You can see that one, like share price. Here You can see the net asset value movement, how the net asset value is moving over the years. You can see that one, of course, in April 2020, we faced the problem of the corona issue. That is why by the time it decreased, once again it tends to increase. This is not the share price, but the net asset value. Like share price, you can see that one. You can compare with 3 months. What is happening in the last 3 months? You can see. So this is not the share price movement. This is the net asset value movement of the Sensex, which was created by the Kotak. You can buy and sell that one. And you can calculate your dividend because this exchange traded funds also. This is how the exchange traded funds are working. So based upon that, you must know. This is a very good example of one of the exchange traded fund from the Kotak. They created an asset backing from the Sensex. Sensex is the value. That is how they calculated that one. So you must know these type of thing. When you are going out, you must know what are all the funds. Let us see the another example. This is an example of Reliance Exchange Traded Fund Gold, Reliance ETF. But you can see Reliance ETF Gold is not traded on BSE in last 30 days. Why? Because fluctuations, dancing effect of the gold price. It tried to increase, suddenly it moves up, suddenly it goes on. So Reliance decided to stop the trading because we can't predict the gold now because of heavy fluctuation. Of course, this is the minus point with regarding to the these type of exchange traded funds. So that is the concept of Reliance exchange traded funds. There are other gold ETF funds. You can see the example in practical. HDFC Gold ETF, UTA Gold is there, State Bank is there, Birla, Invesco, Nippon ETF, very crucial one. Axis Gold ETF, these are the exchange traded funds which are available at present in the form of gold commodity. Let us see how the exchange traded funds are available in Bombay Stock Exchange. Here you can see the example of Nippon India ETF BEES. That means they are invested in the Nifty. Nifty is an index. Here also you are able to see clearly what is the value of the fund. Yesterday it gained 0.22 or 0.18%. That is 120. That is the value of the Nippon India yesterday. You can see what is the price high, what is the low price. You are able to see that one. In case of the Nippon India ETF. Like previous one, in case of Bombay Stock Exchange also, they are telling about the what is the movement of the ETF. You can see in 1 year, what is the movement in last 3 months. You are able to see that one. This is happened in yesterday. Intraday trading. Within morning 9:40, what was the price of this ETF? At the end, what was the price? You are able to know because the selling and buying is happening simultaneously. In mutual funds, it won't happen, but here only it will happen. You can see in this chart what will happen in the 1 year, last 1 year, how much the volume has been traded. Of course, this is a downtrend during the period of March. So this is a very good example of that one. Here in case of Nippon, they disclosed about the methods. So it is equivalent to a stock, but they are not investing in the single one. They are investing in number of things. Here is another example of the Reliance. We have I told. Reliance liquid Bs. This is the debt ETF, or they invested in the debt bonds. That means fixed income. That means interest will be common. That is why in case of returns, you can see first month it is only 1 month. If you are investing, you will get 0.21 only. Only if you are investing, it goes around 3.94. You are able to invest the 1,000 rupees only. That is the net asset value. Even the asset value is same on yesterday. What is the exact price of that one? Looks same. That is the concept of the Reliance exchange traded funds. Next one is, you can see in case of ICICI Prudential, they also created the exchange traded funds based upon the BSE 500. BSE 500 shares they identified their investment in the BSE, they clearly identified here. Same thing, you can see that one. This is a very good example of index based ETF. And the scheme they are given, what is the price on the particular day? It is increasing by 6.31. As usual, you can see the trend. This is purely based upon the index. In case of March end and April beginning, might have seen entire index came down because of the lockdown begins. So same thing, there is no difference. Only thing, the investment opportunity will be different. You can see the returns and SIP returns. SIP is systematic investment plan also. What is the amount you will get 1 year? Even you can invest every year also. And they are investing in Reliance Industries, HDFC. These are all their portfolio where this ICICI Prudential invested. Here they have invested in all these organizations. This is called asset holding. And you can see that one, they used to compare with their others, market peers. They are comparing the ICICI Prudential with the Motilal, Oswal, Aditya Birla, Nippon India, Axis Gold also. That is how these people are marketing fourth stage. That is the marketing of the ETF. They are marketing here. You can see in this example how the funds are moving. So these are the very good example of that one, of different types of funds. As I already mentioned, in case of India, the government of India also moved towards the ETF. This is a very good example, public sector bond, which has been named as Bharat Bond. Government of India also decided to have an ETF bond. You can buy and sell the Bharat Bond, and at present the portfolio yield is maximum 6.69%. See that one. The government also comes towards the bonds. That is called the bonds. Bharat Bond exchange traded funds. They are going to invest in public sector companies. As it is a bond, it should have fixed maturity and you can trade in the stock market. This is how the government came with the bond. They used to call it as bond, Bharat Bond. So these are all the main reasons we already discussed why we are moving towards the ETF. This is the conceptual one. Why we are moving towards the ETF, that is the benefits. Of course, you must know the last one, liquidity. Liquidity is very important compared with the mutual funds or with the stock. Anytime you can buy and sell the ETF. That is the core concept of that one. That is why it has been shown once again. We also already discussed the difference between ETF stock in one diagram. Here is another diagram also. Likewise, the mutual fund difference, exchange traded funds. The main difference we have discussed, mutual funds are not listed in any stock exchange, but exchange traded funds are listed in stock exchange. Likewise, index trade funds, you can see that one. They have discussed the open-ended funds as well as the closed-end funds, what we have discussed earlier. Here is something new. As you are going to close, now we are having sovereign gold bonds also. This also issued by the government of India recently. Like gold ETF, government is also fixing the tenure for the sovereign gold bonds. Government is getting the amount from you and they are going to invest in the gold to increase the economic viability. Government is coming towards the sovereign gold bonds. That means a mixture of both debt as well as the gold. That is one side, it is a debt for the government. Another side, their investment asset holding is in gold. That is the sovereign gold bonds. To increase the economic viability, they are taking that one. You can see the sovereign gold bonds. That is the new one which has been introduced. Of course, in India, it is a new one, but some of the governments already introduced that ones. And these exchange traded funds can also be rated by credit rating agency. But in India, most of them, they have not rated the under the credit rating agency. We have studied the credit rating agency. These exchange traded funds can be rated by the credit rating agencies. So, dear students, you must know all those things. As a concluding view, now the biotech ETF is trading on higher during this period. That is the biotechnology investments. Since medicine is consuming more and most of the people are moving towards the immunity creation, of course, it has been reflected in the stock market also. The biotech firms, the companies are ready to invest in the biotech firms. That is the new thing. Before going to the conclusion, my view, it is also mentioned by the Bloomberg News recently. If you are an advanced learner, if you want to identify the strategy beyond the ETF, it is called as a Robin Hood effect. Robin Hood effect means it is a marketing effect. You know, when Amazon is declaring the sales, recently Amazon Prime has introduced even the freedom sales, and 2 days or 3 days they have introduced the marketing. What happened? The news mentioned that around 200 retailers becomes crore by this because of Amazon. Because the people are rushing towards during this period. Same thing in case of marketing effect, we used to call it as a Robin Hood effect. In exchange traded funds, if the gold is moving high, everybody will ready to invest. They may think, oh, just 2 months back we might have purchased the gold. Now the prices are increasing. So what will happen? If the gold price is something decreasing, everybody is moving towards buying the gold. That is the Robin Hood effect. That is the mass effect identified in the strategy of the ETF. It is reflecting in case of Indian markets. Because of the COVID issue, everybody is moving towards the ETF in biotech as well as in the gold. That is why Reliance stopped the gold, because the Reliance is unable to sell and buy the gold ETF because everybody is ready to buy, but no, there is no securities with the Reliance. This effect is called Robin Hood effect. Robin Hood effect is simply nothing but a concept which we used to tell that a mass buying based upon the behavioral concept of the consumers. Here, investors. If investors are coming forward and dumping into investment in biotech, this is short-term one. Due to the corona issue only, they are moving towards that one. This effect is called Robin Hood effect. If you are able to identify this Robin Hood effect, you will be a successful fund manager for ETF. Those who are going to work in an organization, you will remember that one. Most of these JP Morgan and Motilal Oswal, they are going to find out when this Robin Hood effect will come. When this effect will come, they are ready to push the ETF. Otherwise, they will push the mutual funds. In normal days, they will push the stocks. That is the strategy what we are following in the exchange traded funds. With this, we will conclude today's topic. So I hope based upon that, you must know why we need exchange traded funds. Then what is the concept beyond the exchange traded funds? How we are creating the fund for the exchange traded funds? Why it is having something different? What is the USP of the exchange traded funds? That is very important thing. Then we have compared the exchange traded funds with others. We have seen some of the example of ETF, how the ETFs are trading, the live example in share price movements, the net asset value movements, how it is going. Then for the conclusion, what is going on at present? What is the sovereign gold bonds ETF? Then the Robin Hood effect of the strategy. These are all the things you must know. Then only you are able to adjust the fund. Okay. With this, we will conclude. Any questions now? You can answer. There you answered all the questions. Okay. 71.
Yes, sir.
Good. Any questions?
Sir, do we have assignment for F2?
Yes, we are having the assignment. Have you seen in LMS?
Okay, sir. I'll see today.
Otherwise, I will post in Google Classroom also.
Okay, sir.
What is the assignment? Yes. Pinto is today only coming actively.
No, sir, I was there for all the lectures.
But you are not asking any questions. Previously, you used to interact. Yes.
Yes, sir.
Maybe due to this COVID. Now you return back to Bangalore or in Chennai?
No, sir, I'm still in Chennai.
Chennai. Okay, ma, good. Yes, now you can show your face. I'm going to see your face and take a screenshot. Absal is there. Melvin. What about others? Rijo is not coming every time and seeing that one. Yes, Rijo finally decided. What happened, Rijo? Something different. Okay.
Yeah, sir. Like we changed, right, for the better.
Okay, good. Sherin, Father Sijo, Shibi Thomas. Somebody name is mentioned as Sony.
So Sony Jose, sir.
Oh,
She's,
Sony Jose. Okay.
she's in our class. Yeah.
Why nobody is ready to show your face? Others, Ajit. I think something is happening. Ajit, show your face, pa. Whether they escaped. I'll post that one. Then I will say that only those who are showing their face I'm able to give the attendance.
Sure, sir. Sure.
Nice
Okay,
idea,
pa. Now you can see the camera.
Thank you, sir.
Okay, good. Bye. Father is
Okay,
now.
sir. Bye.
Bye. We'll see you next class. Bye.
Bye, sir.